On e-commerce side, I'm sure you know that Blue Dart is a uniquely positioned company currently. While we serve our B2B customers, which is a larger base, we also have e-commerce vertical with us, where we deal with all and who's who of e-commerce industry in India. We have big names as well as long tail, wherein the startups also deal with us. We also have omnichannel presence, where we are leading currently. This omnichannel tie-ups are exclusive tie-ups, where we deliver value-added services and help omnichannel or omni brands to have value-added services for their customers. And a few of them have been in public domain, like Apple is one of them, which had publicly talked about their tie-up, exclusive tie-up with Blue Dart, and which we continue to nurture and grow. I will skip this slide. Here I would like to devote 5 minutes on the digital interface. Currently, any business is cannot imagine its survival without support of technology. So obviously, with the larger volume, it plays a vital role for our customer experience. In terms of delivering better customer experience to with the help of technology. So be it and pandemic only has accelerated the pace of digital interface in our operations. So be it real-time tracking, be it sorry cards, be it providing data exchange with the customers real-time basis, be it our shipment journey, all that is tracked through a digital interface. We also have a state-of-art billing system which has recently been deployed, which helps us in not only reaching our invoices faster to the customer and also with accuracy, but also helps us reducing paper consumption. So from ESG perspective, also number of things which we have implemented in last 1 year, be it state-of-art billing system, be it contactless delivery. So earlier, if you recall, when courier used to come, he used to deliver shipment by taking signature either on paper or on a machine. Now we made it completely on a device agnostic, and given the pandemic situation where contact was to be minimized, keeping the safety in mind, so we have started taking as a OTP as a signature, which is on the registered mobile number, through which we are able to register that is valid delivery. We have moved our collections, I would say during pandemic 100% of the collections, but now currently around 75-80% of the collections are in digital mode. We have on a World Environment Day launched a vendor portal through which we will allow vendors to submit bill in a soft form. So there also paper consumption will be reduced, and which not only saves environment, helps reducing carbon footprint, or ensuring that trees are there, they are not cut for producing papers. At the same time, helps us in automation of the processes. So it's both ways a win-win situation for one for environment and for us from efficiency point of view. Of course, all this information is available through customer. Our customers are able to access all this information on their dashboard. So earlier reports were being sent on a hard copy form. Even those also have been replaced through dashboard. So they are able to now see online updated information all the times. The next big thing which currently we are doing is automation of hubs, where one that during pandemic we also faced some labor situations. So to tide over that situation and also to handle growing volume in a limited time frame, we are now automizing our hubs so that within the same time frame our throughput is enhanced. So this is where we are using digital interface not only for efficiency improvement for us, but also improving customer experience. Business strategy, I'm sure you know that there's a focus from company on quite a few things. I would highlight 4-5 major items here, which is focus on a small and medium enterprise, which we are talking about, because that's where in the tier 3, tier 4 cities have many SME category customers. So we are eyeing growth from smaller towns. We are also looking at retail business growth, because it is a very low levels. In developed countries, retail business is roughly about 15-16% of the retail spending, while in India is still at about 3.5-4%. So there is still a lot of headroom which we can cover up, and that's where we will see huge growth in this space. So we are fully geared up to handle that kind of growth. Digital, we just spoke about that in all activities, be it operation, be it customer experience, be it our internal processes. Digital interface is given priority so that efficiency and transparency and accuracy is ensured. And of course, it provides better transparency to customers and also vendors. Of course, focus continues to remain on ESG compliant organization, being a responsible corporate citizen. So a lot more focus on diversity, on reducing carbon footprint, and also ensuring that governance standard continue to be on a higher side. I will skip this because this is same from long-term perspective. I think from financial track record point of view, I'm sure you would have seen turnaround in last 4-5 quarters. The situation, what was there because of certain I would say regulatory changes and also some aggressive expansion which we had undertaken in 2018. So both put together had some impact on 3-4 years between, I would say 17, 18, 19. And also then 19 towards 19 and we had a right sizing exercise which had impact on the bottom line, but thereafter we have a strong comeback, and you would have seen post pandemic our results have been good, both growth on top line and bottom line has been good, and that is result of one, that cost efficiency measures which we had initiated in 1.5-2 years back. Those are started delivering. We also had yield realization improvement. So that also is helping us in taking up our bottom line. And of course, we continue to have now post break even benefit of the geographical expansion which we did in 2018. So all the three factors have been helping us in improving our performance. And gradually you would have seen that last 5-6 quarters have shown improvement in reported numbers. Yes, in between when wave 2 came in April, we had some blip. That blip was about for about 6 weeks from mid April to May. That's where severity of wave 2 was seen, and state this time is opposed to the first wave where central government had declared lockdown. We had lockdown from state governments. And because of that, it was a different timing, had a different locations coming under lockdown. So we could not plan our network in a different way like we did in wave 1. So obviously we had to run entire network with the lower capacity utilization. So like generally we have about 90% capacity utilization, but during this 6-week period, our utilization dropped by 20-25%. As a result, we have costs remaining same, but there's no revenue because there were no shipments because of lockdown, businesses being closed in wave 2. So that's why there was some blip in the previous quarter, which is in April to June quarter. But June had a strong comeback or bounce back, and the story which we had from January to March again resumed in the month of June, and we are continuing with that journey. We are seeing a positive outlook as we are moving into future quarters. Yes, there is a slight cautiousness in that because government is talking about wave 3 coming in. Hopefully wave 3 will not impact much if we have taken a vaccination. So it is expected that with the vaccination immunity being generated, so obviously the cases will not be as high, and as a result business may not be impacted as it was impacted in wave 1 and wave 2. So that we are keeping our fingers crossed. But however, if we discount the wave 3, we are on a good journey. Outlook is positive, and with all the indicators, be it GDP side, improving, or government talking about Make in India, or because of and also geopolitical regions because of which manufacturing is improving in India. I think this sector is supposed to be doing well because we are part of supply chain. And if manufacturing grows as it was proposed in the budget, last year budget, and also 5 trillion economy which government spoke about, I think that will be good outlook for supply chain companies, and where we play a vital role in ensuring that things reach on time, be it either for production or for consumption. With that, I take a pause here, and maybe we can open for question answer. Thank you. Alok, over to you.
Thank you so much, sir. And Thanks for the detailed presentation. Anyone having a question can raise their hand and directly ask the question to the management, or they could pose their question in the chat box below, and then I can ask the management those questions. Yeah. We have the first question from Mr. Pritesh Chheda. Please go ahead, Pritesh.
Yes, sir. On your comments on the margin from the opening remarks which you mentioned about utilization being lower in Q1, which impacted the margins. But when we see the direct cost, which is your gross margin itself had reduced vis-a-vis what we saw in the best quarter, which was Q4. So how should we analyze that, and how should we analyze the fuel price movements which we are seeing, and if there is any impact on the margin, or you have taken another round of price hike? So if you could help us understand these few things, with tandem to Q1 versus Q4, and with tandem to the rising fuel price and your pricing actions. Thank you.
Okay. So you rightly mentioned, when we talk about, the cost. So when you look at gross margin is after reducing the cost, which is operating cost. So operating cost has got entire network and manpower cost, which was at a full capacity while there's no revenue. So obviously gross margin will drop. When you have an entire cost as it is, the cost base is not gone down, but your top line gets reduced. So obviously gross margin will drop. Having said that, we had taken GPI, which is and we should take GPI even last year also we had taken to offset our inflationary cost, and and that is to offset whatever increase we give, be it in salaries and also to infrastructure like to landlords and also to airports, which we are supposed to be paying them, or the cost increases which happens because of inflation. So to take care of that, definitely GPI is proposed. For last 2-3 years we have been doing that. Coming to fuel price, I think fuel price, we have a good mechanism through which we have a pass on. We have a natural hedge and we pass on all increase or decrease in fuel prices to the customers. So, that has hardly any impact on our financials. The Q1 financial impact is more coming from lower utilization of facilities or the network because of lockdowns, and that too in a 6 weeks period between mid-April to May end.
What kind of price increases have been taken in this financial year?
So this financial year, though the announcement as a MRP types was 9.6, but effectively I guess it could be in the range of about depending on customer. Large customer obviously negotiate for lower price, and a smaller customer may not have as much negotiating power. So effectively you can talk about say 4.5% kind of price hike you get, which is just to offset the inflation.
Which is just meeting the inflation.
Just to offset the inflation.
Okay. When you talked about the June performance, and when you were referring back to what you saw in Jan, Feb, March. Yeah. So you're mentioning that the absolute business volumes were similar to what you saw in Jan, Feb, March. That's how you're putting for?
Yeah. So if you take on a per day basis volume, it was similar.
Okay. And my last question is, should we take margin reference of the Jan, Feb, March, which was at about 17% for your business as a reference? And in the past calls, you have mentioned that there are levers to expand those margins versus what were reported in Jan, Feb, March. So is that reference right? And what kind of lever expand the margins?
Generally, we don't give guidance on the margin, but having said that, yes, macro outlook is that the levers which we're working on, we continue to work on them to get a better efficiency out of it, and we are confident that those levers, the way they've delivered in the past, they will continue to deliver. So only that much I can give you, comment, a macro level comment. But yes, from a specific margin perspective, company is not in practice of issuing any guidance that what kind of margin would have. But yes, from business growth perspective, outlook is quite positive. But for if there's any impact of Wave 3.
Okay, I'll come back for more questions if I have. Thank you very much.
Sure.
Thank you. Anyone having a question can please raise their hand. And in the meanwhile, sir, I have some questions which I got in the chat window. So first was, what would be the daily e-com volumes that the companies clocking, and how is it as compared to the last year?
So again, Alok, I may not be able to give you exact volume, but yes, I can give you macro indicator that of late, I would say post wave 2, we have seen significant improvement in volume from e-commerce business. So there's a very healthy growth which we have been witnessing. That's because of changing in customer buying pattern, because people are still working from home. So obviously they've been ordering more of stuff online and also wanting to get it faster. So since we have air infrastructure, we are able to deliver faster. So as a result, we are tracking much higher volume as compared to previous times.
Sure. And one related question was on the festive season coming up, but and also there is a fear of the COVID wave 3, hitting. So how is the company planning on the capacity expansion, or expand, or how is it preparing for that? Are we looking at from an optimistic side, or are we also taking a cautious approach on that?
So we are taking a balanced call while we are improving capacity to handle shipments. In fact, the growth we are already seeing, as I just mentioned, there's a healthy growth in volume. So we have built up capacity, but and some of it we have built up on a variable cost basis, so that if wave 3 comes, we should not be hit with the large fixed cost. From that angle, we are taking a balanced call and getting ready for the festive volumes.
Sure. We have a follow-up from Mr. Pritesh Chheda from the. Please go ahead.
Yeah.
Sir, yeah, sir. So now, what is the market share that we have on the e-com side of the volumes?
So, Pritesh, right now, because of pandemic, nobody has undertaken any study, both be it e-commerce side or be it on B2B side, because currently markets are not behaving in a normal way. So maybe that's why there's no study undertaken to understand that what is the market now and overall market and how much is share of each of the players. So maybe post wave 3, either it happens or not happens. Maybe it will be taken up for by the relevant agencies.
But pre-pandemic, our market shares were 8 to 10%, right?
On an outsource basis, yes.
Okay. And
we would have gained market share both on air and also on e-commerce side, because we have seen much healthier growth as compared to the market growth.
Okay. On the pricing side of the e-com parcels, what is the market behavior now? And on the air cargo side, what is the market behavior on supply demand?
So on the pricing on e-commerce side, I think of late we have seen some good signs. While Blue Dart always believed in doing business on profitable way, but at the same time, the competitions were quite hyperactive in terms of selling at a lower price. But I think there is some change in their strategy, maybe because of impending ensuing IPOs, etc. We have not seen as aggression as it was there in the past. That could be one of the reasons that when if you talk about price increases, obviously customer look at existing the player who can offer better service quality. So that could be one of the reasons that we are getting more, healthier volume. Having said that, I think since, as I mentioned in the opening, there's enough headroom for players to grow, and that growth will continue. What is your follow-up second question on this?
I'll just take the follow-up next. Just before that, one clarification: is there a pricing increase taken by competition in e-com parcels?
That's what we are getting to hear now, that they have been now talking about price increase, because they need to improve their performance. Once they become listed, or their investors ask for profitability and the returns, obviously they will to have a sustainable business model, unlike what they were earlier doing, where they were selling below the cost price.
My second question was on the supply side in the air freight market. Are there any changes? Because last two and a half years have been very good on the pricing side for us. So is there any supply side disruption that you see, or it's going to be equally good?
So supply side on air infrastructure, I think there have been competition in the past, and now also there is new competition being spoken about. So it is always good to have competitions which keeps us ahead of curve to deliver better customer experience. So we welcome any new competition coming up or new capacity coming up, which will only reinforce our USP that if we need to be ahead, obviously we need to deliver better customer experience. And we swear by that, and we will continue that great customer experience, which has been our success mantra so far. So competition, though, has come in the past, and I'm sure future also competition will continue to come. But then what matters is that how much value you are able to deliver to customer, or how you are able to delight customer, basis which success factor comes in.
But any excess freighter capacity coming up over the next couple of years to disturb the equilibrium?
Not exactly. Not exactly. In fact, in between, one of the competitor had put in cargo aircrafts in domestic lanes, but they could not fill their aircraft. So obviously they withdrew and put it on international routes now.
Okay. Clarification was see. So we have two business, air freight and road freight, which we call express and air freight differently. On the express side, do you carry any e-com parcels, or the entire e-com parcel is largely on the air freight?
Not clear on the question. Let me give you, if I understood rightly. So we do carry e-commerce shipments on air, which are small packages, and also we carry commercial packages on aircraft, besides the third product, which is a courier product. So there are three products which are carried on the aircraft.
And on the road freight, which is your express service, do we have any e-com parcels there, or that is just?
We do have on road as well. We do have on road as well. Okay. So depends on customer requirement. If some customer is looking at faster reach, then obviously air suits them. And if it's a low ticket item and a customer is not finicky about delivering in few days, then he uses the ground service.
And how much will we document? So we have document larger parcels and smaller e-com parcels in air. Yeah. Is there any broader split available there? What is how much?
So courier is about around 25%. Packages, the air package is about 18-20%, and e-commerce would be another I would say 14-15% packages.
Okay, so that is about 60%. We have 75-25 split, right? 75%.
So 70-30.
So this you are giving breakup of 70, or you are giving
70. 30.
So, okay, so you are giving breakup of the 70%.
Yeah.
Okay. And last, how different is our road freight business vis-a-vis one of our competitor TCI Express, or is it quite similar?
It's quite different from the perspective, because if you see, there are already existing players like you have Gati, Safe Express, and TCI Express. They are also earlier player which have been in existence. While Blue Dart came in, Blue Dart created its own niche, leveraging its I would say capabilities in air. So here, rather than competing on pricing like e-commerce players they have been doing, we focused more on value addition and as a USP. So our customers are all premium customers. That's why, despite starting late, very late in the business on the ground side, we have been a premium player, and we are still growing our market share. So as the last study showed that from 4.5% market share in 2009, we have moved to around 17% in 2020 with the premium pricing. So we are we intend to be market leader even in this space by providing solution to customers rather than and adding value to their processes rather than competing on price.
So the nature of the business is same.
Nature of business is slightly different. Even customer I would say verticals are also different.
And last, on the volume growth side, on the air freight, what would be your expectation for volume growth on the air freighter business, or let's say the air cargo business?
Yeah, so when you say air freight and air cargo, let me give clarity here. We are all talking about only express cargo, because Blue Dart is known for express cargo. There's no because if you technically talk about cargo, it may be express, may not be express. While whatever I'm talking about is only express cargo. Because when you compare with a passenger airline, they carry all sorts of cargo, not necessarily only they're carrying express cargo. While Blue Dart is only an express cargo.
Yeah. So for your assessment, sorry for that, your assessment
No
on the
issues.
volume growth on express cargo.
Yeah, no issues. So we expect that going by the trend which is there in developed countries, we will continue to grow air express business, maybe high single digit, if not double digit.
Despite the fact that e-com, which is 1/3 of your business, should be growing higher double digit.
But then, because e-commerce parcels are not as bulky as as the normal packages are, you may not be able to fill your aircraft with only e-commerce cargo.
So when you gave that split of percentage, you
Yeah.
gave by the value of the business, right?
Revenue, yeah, Blue Dart revenue.
Right, you gave it by Blue Dart revenue. So
Yeah.
at least that part of the business should grow double digit, right?
Yes.
Okay. Thank you, sir.
Okay.
Thank you so much. Anyone having question can please raise their hand. And sir, we had some question
Sure. I'll continue.
through the chat box. The e-commerce surface segment. So the question is related to whether we actually make money in the e-com surface segment, particularly the last mile delivery. I mean, do we have the critical mass there? And we have seen a tie-up with Apple there. Any sort of color we can throw on other customers in this space?
So just to tell you, I mentioned right in the beginning, Blue Dart believes in doing business profitable way. So any business we do obviously is a profitable business. So ground is no exception. Ground e-commerce is not no exception. Point number one. Point number two, I guess you are referring to omnichannel presence. So I think there we have confidentiality agreement with customers. So I may not be able to disclose name of the customers. But yes, those who have said themselves in the public domain, that is Apple has been vocal, and they've mentioned in public domain about tie-up. But there are a few more tie-ups which have happened, which are growing very well. And I guess from future perspective, this is going to be one of the good vertical with high premium business for us, because this requires a lot of validation to I would say retaining their loyal customers. So currently, like Apple has been offering many validated services to their customers, which is delivered by through Blue Dart.
Sure. And sir, one question was on the network utilization.
Yeah.
What is our current network utilization and what has been the peak network utilization? If you could just throw some light on that. Yeah.
So network you are referring to, I guess, air network or ground network, because we have both.
Both, sir.
On air side, I think peak has been at 90%. Currently, we are at around 88%, network utilization. And on ground side, I think generally is 86-87% has been the peak. Currently, we are at around 85-86%. So close to the peak utilization of the ground network.
Sure. And in the last couple of months, we have seen active.
Alok, just a minute.
Yeah, please.
Sir, can you give the utilization figures again? I missed it. Air and ground.
Sorry?
I missed the utilization figure. The sound was
utilization, peak utilization on air network is close to around 90%. Currently, we are at around 88%. On ground, generally peak is about 86-87%. We are currently at around 85%.
Okay, thank you. And when you mentioned peak, obviously you mentioned quarter 4.
Yeah, it could be in between. It happens, not necessarily during festive, but towards month end when you have quarter ends, that time also peak performance could happen.
Okay.
Sure, sir. Just in related question only. So in June, what would those utilization levels would have been in May and June? I mean, how much fall we would have seen?
So April, mid to May had dipped. So the utilization had dipped in the range of around 68-70% kind of ratio.
Okay.
Which came back to almost
in both surface and
both. Yeah.
Sure. And it, sorry, you were mentioning about it came back
came back to the normal levels in towards June end.
Okay. So, and one more question is on the network cost, which are around 25% of our revenues. So what inflation we are looking there in terms of the change in the network cost going ahead?
Sorry, can you repeat the question?
Yeah. The network costs are would be nearly 25% of the revenues. So what inflation are we factoring there for in the network costs over the next couple of years?
See, when you talk about network costs standalone, it has got 2-3 variables. One variable is the fuel price, because while it may not impact the bottom line, but when you absolute number, when you compare, obviously that will have a variation of the fuel prices. Second variable is the utilization factor, which we just discussed about, that if utilization fluctuates, obviously that has impact. If revenue drops and utilization, the number of shipment drops, then utilization also drops. So your percentage will jump, because network cost is generally fixed in nature, unless you know for sure that certain network you can change basis the prior information. So these are two factors which generally has a and the third factor at times, which may not be in our case, but generally you'll find in many player cases the vagaries of market on the pricing of hiring of the vehicles especially. But since we have a long-term stable contract, so we don't face that situation, but I'm sure many other players would be facing that.
Sure. So anyone having question can please raise their hand, and we can take those questions. Yeah, we have one question from Mr. Ankit Gupta from Alchemy. Please go ahead.
Yeah. Hi, sir. So you said your utilizations are already 88% here. So do we have to increase our plane counts, or do we have to increase the new routes going forward?
So Ankit, you're right. What happens? We do keep reviewing. How do we improve our air capacity, and also we need to induct new aircraft. So what we do is we built up a load using passenger aircraft for smaller sectors, and then start working on acquiring a newer aircraft or a new capacity. So currently what we are doing is, some of the customers are not as finicky about 24 hours delivery. So we work with them and utilize aircraft during daytime, because daytime generally we are not been using. Secondly, we have been building up load using passenger aircraft. So once it reaches to a certain level, then we start looking at getting a new facility, a new aircraft. So that when we induct the new aircraft, at least you're not running at a very low capacity utilization. You have at least 50-60% capacity already used, so that our turnaround time or break-even time reduces drastically.
Sir, any plans of buying more aircraft from these two own models like we did last year?
Sorry, can you repeat?
Plans?
Audio is not clear.
Yeah, sir. Any plans of buying more aircrafts from operating lease to own model like we did for two of the aircrafts last year?
Yeah, so we do keep reviewing that. This is one of the cost efficiency program which we have, and last year we reviewed that, and we found that 2 aircraft makes sense for us to purchase in terms of from cost to the company point of view. So we took that call last year. Similarly, we'll keep doing that that thing in as we move ahead. Every quarter we review, and if it makes sense, the situation wise, we'll take a call, and accordingly I'm sure you will get update on that.
Okay, sir. Okay. Yeah. Thank you so much.
But we take call only on if it makes sense for the company's benefit point of view.
Yeah.
So I'm sure as I said, that one of the efficiency program is this also, so that if it is lower cost for us or without changing capacity, and we are able to lower cost, we'll definitely take that call.
Thank you, sir.
Thank you.
Thank you so much. Anyone having question can please raise their hand. Sir, one question which I had received on the chat box, one was on the competition. Like we have seen, players like Delivery clocking or almost a similar turnover like ours, and other players are also trying to enter the B2B space majorly. So what is your view on that? Are we seeing the competition? How is the competition now as compared to what it was maybe a year back? And if you could throw some light on that.
When you compare top line, I think comparison is not right from the perspective that if your business you're not doing profitably, then you can generate as much turnover you want, because your focus maybe on valuation, and that's why you are increasing top line. But the fact is that out of the top line, how much is flowing through bottom line, right? That's what one should look at it. Having said that, as I mentioned in my previous discussion, that yes, off late for last 2-3 months, we see some different kind of activities where people seems to be a little more serious about sustaining their business, or maybe because there would be pressure to deliver better results. So they seems to have changed their strategy, and that's what we are getting to hear about it. So maybe because once the competition comes on an equal platform, there would be interesting ground for us to also garner volume, because if you are already having a price which is profitable versus people who want to have a substantial increase from customer, I'm sure any customer would think twice before giving such huge increase on the price, because of which they want to be profitable. So I think it's going to be interesting time as we move ahead. And next 4-5 months will tell us how the competition scenario is going to be reflected because of substantial hike which they propose to take to sustain the business.
Sure. And also, sir, most of these players or the new age players, we typically call them. So these players, that they talk about the technology being very superior as compared to some of the traditional players. So we understand that technology, most of the other old age players also would have adopted. So any major differentiating factor, according to you, is there, or it's more or less everyone has access to that technology?
I think technology is hygiene in this business. You cannot sustain your business without having a updated technology, right? So only thing is that somebody may talk a lot about it, and somebody may not, because he feels that it's a without which business cannot be sustained. So it's like somebody, you as an individual go and buy iPhone 13, or when it is launched, I'm sure you will flaunt it, right? That I got a new phone. And versus somebody who is used to this kind of practice, he may not flaunt it, because for him it's a regular thing. So actually it's individual choices to talk about, but the fact remains is that without having updated technology, right, which is a hygiene, this business cannot sustain. So from technology point of view, I don't see any major difference here. And if you don't have a updated right technology, how would you have improved customer experience? If customer experience is not good, how would you grow? So it comes back to the cycle. To deliver better or superior customer experience, you need to implement all updated technology solutions so that customer is able to, at his convenience, transact with you.
Sure. So basically, we are not then competing majorly on the technology part of it. We compete
technology
more
is
on the
hygiene for everybody. I don't think whatsoever anybody may say that technology company and all that. Without technology, no company can survive, and your customer experience cannot improve.
Got it. And sir, one question was on the aircraft topic. So we mentioned that we plan to fly the aircraft, 6 aircraft during the day. So does that anyway materially change the capacity for our Air Express business?
So from capacity point of view, definitely it offers additional capacity during daytime. While we had a 500-ton capacity per night, now leveraging that fleet, if we are able to fly during daytime, obviously that much capacity utilization will improve, and will only add to one would be able to take that leverage out of the existing cost by better sweating the assets.
Sure. So how much the capacity can go up to? I mean, say
So actually,
from 500?
it will be theoretical at this point to talk, because how many aircrafts we are able to fly during daytime. Actually, that's what will matter. So currently, maybe off and on we have been flying two aircrafts for some charter operations and for some local requirements. But we are exploring more opportunities for using the entire fleet during daytime. So like so far we have been flying aircraft maybe 7-8 hours in the night, 8 hours or so. If we could extend to 13-14 hours, that much more leverage from the existing cost one can get.
Sure, sure. Anyone having question can please raise their hand. Sir, yeah, one question was on the e-commerce part that we have seen. So we are majorly having exposure to the B2B side with nearly 80% share and 20% coming from B2C. So e-commerce, which is primarily part of B2C, is expected to grow much faster than the B2B space. So how are we looking to capture that, or how do we see the share of B2B and B2C moving going forward for us?
B2C, which is e-commerce, I think is going to see very high growth, and because there's a lot of headroom available, we are fully geared up in terms of system and processes, and but definitely our USP of doing business profitably will continue to be there. So will any business will take on e-commerce side will be profitable business and not undercutting the competition, because that one can do anytime. So that way, since this it is expected to grow much higher, so I'm sure the proportion accordingly could change over a period of time.
Sure. And also recently you came out with a press release about the drone testing. Congratulations on that part. So sir, if you could just provide in terms of how
So this was
what kind of opportunity we are looking at.
this
Yeah,
was
please.
really a proud moment for the entire logistic industry. That first time in India, we did that trial, and we were successful in delivering vaccine day before yesterday. But having said that, we need to do some more trial, before we come out with how we're going to be using this and which are the areas. Definitely, one or two areas on top of mind is medical services and emergency services. It can help. But which are other areas which can help us in terms of building our capability? I think maybe a little more time is required. It will be premature to discuss at this point of time. But yes, it is a path-breaking kind of innovation which we have, which has been successful, and going forward will be a path for us for adopting this newer means of delivering and addressing market.
Sure, sure, sure. But any indication of maybe a couple of years down the line, how much, what could be the size of opportunity or something of that sort? If you could just throw some color on that.
So Alok, the point is again, till which all areas will be successful. That's what we are trying to understand. Because trials are not just one trial. We have done, we're doing multiple trials and on different kind of products, and what impact on those products will be, and how fast it can be delivered, and which area it will find application. All that is being explored at this point of time. So,
Sure.
so talking about which market and how much it will be able to handle at this point of time may not be, right time.
Sure, sure, sure.
Yeah.
Yeah. Anyone having question can please raise their hand. So I think, sir, in this session we don't have further questions. So anyone having question can please connect with me separately after the call. And thank you everyone for joining in. And we can log off from this call. Thank you. Thank you so much.
Thank you.
Thank you.
Thank you. Take care. Stay safe.
Thank you.
So, sir, we'll start in by around 3 o'clock. It's a one-on-one meeting.
Sure.
Yeah. Okay. Okay. Well, in the same window only. Aman, in the same window only, right?
Yeah. But you can just stop the recording since we have to
Sure.
record all the sessions separately.
Sure.
With all vaccinations which are due, with the protocol, I'm sure you would have taken care to make sure that your immunity is developed. And also wish you happy festivities. Currently, we are in Ganpati period, so hope all of you are in a limited way enjoying the festivities, because we know that there are certain restrictions which are in place currently. So having now said that, I will start from the current. Maybe I'm assuming that you would have known Blue Dart performance till March 21, and maybe some of you would know even the Q1 performance. But then still, I can give you some brief about it, and then we can open for question answer session. Is that okay, man?
Yeah, sure, sir.
So we had a very strong Q4 of financial year 2021, and we were continuing that journey in new financial year. That is where we saw that wave 2 come in, and it probably started more seriously in the middle of April, and that's where unlike the previous lockdowns, where central government had taken a call to have a central lockdown. This time it was, states were in thriving state, and they had to take a call on depending on situation on each of the location or each of the state. So accordingly, there were scattered lockdowns, which had some impact on the business. And in fact, some of the states were quite, forceful in implementing the lockdown and not even allowing essential services. So that is where some amount of disruption happened, and that disruption was roughly for about 6 weeks. That's from mid of April to end of May. And we saw because of lockdowns and uncertainties and many of the businesses getting closed down, and somewhere because people suffering because of wave 2, we had impact to our volumes. For about 6 weeks, we dropped our volume by roughly 25%. And though network continued to apply, unlike in wave 1, where we had curtailed our network because of central lockdown. And this time, since it was not central lockdown, obviously we had to run our network. So network continued full-fledged. All the Blue Darters were reporting as usual for pickup and deliveries. But only thing that there were fewer establishments which are open or fewer shipments which are available. As a result, for 6 weeks, we had impact on capacity utilization, while cost remaining fully there, but top line did suffer because of lower volumes. So that had impact on our first quarter result. Having said that, post May, we saw very strong, bounce back of the economy, and we almost came to the level of, I would say February, March levels in June itself. So while the loss of volume, which was being experienced in mid-April to May, was back on track right from beginning of June, and that's why you see some impact on the performance of the Q1. Having said that, I think from June onwards, we have been continuing our journey, what we had, in the first, or rather fourth quarter of 21 financial year, and similar trends currently are being continued. While from outlook perspective, we expect because of all the indicators which currently are there, be it GDP growth, be it focus on manufacturing, be it geopolitical regions, all of them augurs well for Indian economy, and we are quite positive, about future growth. And we being Blue Dart being part of supply chain, both on the production side as well as on consumption side, have a good opportunity to grow, its market share and also its top line. Having said that, I think currently we are also staring at the risk of wave 3, and we expect that with the accelerated vaccination program by government, hopefully, and let's pray that wave 3 does not impact business much, because of vaccination, people would have immunity developed, and it may not be as serious as wave 2. and may not have major impact on the business. That's what we expect. But only time will tell us what exact impact it was there. And that's where in my opening remark, I said, if your vaccines are due for you, please have your vaccines taken on time so that we are all able to avoid damage by wave 3. So with that, I guess we can now have open session being open for Q&A. Over to you, man. Thanks.
Yeah, thank you, sir. So anybody who wishes to ask a question can either directly unmute themselves and go ahead, raise their hand, or even type in their questions in the chat box. I would be happy to read them to the management. So I have got a question in the chat box.
Sure.
So the participant is asking which sectors are seeing strong recovery post COVID wave, the second COVID wave.
So sector-wise, if you look at, in fact, both B2B, B2C are seeing a strong growth. And to name a few specific areas, I think e-commerce is definitely growing at a very healthy space. And also on the B2C side, B2B side, especially the pharma and auto parts is growing much faster. Of course, electronic also is there, which is supporting the high growth because of supply of laptops, online, work from home, online classes, mobiles and laptops are all being supplied.
Yeah. And also the fuel price seems to have stabilized in the last few weeks. How are we dealing with the pricing now? Any price hikes that we have done in recent times?
So price hike we had taken beginning of the year. That's the GPI which we take to offset the inflationary cost. In between, we don't take a price hike because that's an annual phenomena where we estimate our inflationary cost, and basis that we determine what kind of price hike we need to take. Having said that, as far as fuel is concerned, I think we have a mechanism to pass on any increase or any fluctuation in fuel price to the customers. This mechanism has been there for last 18-20 years now. I think, and that has been working well for us. And if there's a price fluctuation is downward, then we pass on that to customers. And similarly, we do have a pass on of any price increase which happens, on the crude side. So that's a natural hedge available to us for quite a large number of years. So that generally would not have impact on our results.
Yeah, thank you, sir. So anyone who wishes to ask a question can unmute themselves and go ahead.
Yeah, hi, can I go ahead?
Yeah, sure.
Yes, Emma.
So I just have a question on the competitive playground on the B2B segment. And I mean, you can educate us, don't have much of an insight into it. But as I see it, we have our express cargo business, which competes with quite a few many carriers in the domestic leg who have cargo services on the belly of their passenger aircrafts, right? So can you just give us some sense on how the volumes have actually behaved pre-COVID and post-COVID as you see it? I mean, post-COVID meaning I'm talking about currently after the second wave. And at the same time, the second question would be, can you give us some sense, as you say that, you have a pricing mechanism wherein you pass on prices as the fuel prices go up. How much of a pricing power do we have vis-a-vis these competing players, especially in an environment where, while I know turnaround times are extremely important, but a lot of businesses are looking at cost-cutting measures, so they would probably go to the cheapest service provider.
First, let me answer the pricing part, and then second part, let me take on later on. So pricing part basically refers to the fuel prices. With if I am understanding right, you're referring to fluctuation in fuel prices and how how much you'll be able to pass on. Is that the right understanding?
Yeah. And if you can give us some sense of how do you index yourself in terms of pricing versus the other players?
Yeah, sure. So we have a very transparent mechanism which has been in place for almost 20 years now, 19-20 years, which is available transparently on our website as to how, depending on how the fuel prices move, the fuel surcharge would be applicable accordingly to the customers. And that is also not only available on our website, but also printed on the bills when we submit to the customers. That's point number one. Having said that, I think it is only fair that when you have a transparent mechanism through which you are passing on fluctuation, I'm sure customer appreciate that, because when it goes down, they also get benefit of it. So there has been a faith from customers in terms of transparency and also acceptance of the mechanism. While I'm not able to comment how competition handles their, the cost of the fuel, but for us, the mechanism has been actually working well. It has withstood the test of very high fuel price when it went up to 140 plus dollars, and it has seen even almost negative, which was last year, in a kind of fuel price. So it has seen both the extremes, and which was well accepted and well appreciated by customers. And that's what we believe, that in future also it will continue to support us in ensuring that we are able to utilize our increase in or any fluctuation in the fuel prices. So that's on the fuel side. While sometimes competition may increase, may not increase, I don't have a transparency on that, how they determine their economics on the fuel side. Because most of them have not put up very transparently their mechanism. They put a percentage that what would be applicable, but how does it move in terms of movement in price, not clear. So that's probably hope that answers your question, Hemant.
It's not clear to me. What I'm trying to understand is I know that it's difficult for you to figure out when the competitor will increase the price or not. But being a market player for so many years, we definitely would understand what the pricing environment is from many of our B2B customers or at the retail level vis-a-vis the competition, right? I mean, I'm just trying to understand. One is, have we been over-indexing ourselves and therein losing out the incremental growth rate in the past? That's what I'm trying to understand, and that's why I asked the question that are we priced very high vis-a-vis the competing players?
I think one perspective probably we need to understand that Blue Dart is a premium company. And when you talk about premium company, obviously to deliver premium services, you need to invest. And that because of that investment, obviously your pricing will be relatively higher than the other players. So depending on what proposition you have for customers, accordingly customer will choose. Like today, just to give you another example, anywhere you go, you have multiple choices available. Same product in a different places, you will have a different pricing. But yes, there are differentiation in terms of ambience, in terms of value additions, and also how you perceive that value. So these are the things which have a different meaning and how reliable the service is. So drawing a parallel to that in our kind of industry, that how safely and how timely you are able to deliver service. And for that, we have invested heavily, not only in technology, but also in aviation system. So nobody else has an aviation system through which they are able to give such high level of reliable service. So just to give an example, our reliability of service is 99.6%, versus others who are using at times passenger aircrafts where space is limited, and then they have to use multiple aircraft for carrying the load. Obviously, they are not able to give you time definite service, and even day definite service becomes a challenging scenario many a times. So when you talk about a requirement which is urgent, and that's why you're using courier service, and if you are not sure about reliability, then obviously, then why choose a courier company? Then one can go to post also, because when you are not concerned about timing. So there are multiple options available, and that's where when you talk about premium service and reliable service, obviously that comes as a higher price, and that's why Blue Dart is in a premium space. So what you're mentioning is a high pricing. I don't think this is an issue of high pricing. It is an issue of proposition of service delivery vis-a-vis competition, and of course you need to make sure that you are profitable. So based on your investments and the service delivery proposition, you will have a pricing strategy. So that is where we have decided to be profitable, to carry out profitable business and also be premium, so that our customers get a very delightful experience on delivery rather than waiting and suffering for delays.
Just one final question. In terms of revenue breakout, what proportion of your revenue is documents versus parcels?
So I would say around 25% of the revenue is about document.
45%, is it?
25%.
25. And how has that trended over the last few years? Has it been on the downside?
So it has been growing, but of late, because of pandemic, when offices are not open and certain industry verticals are closed, be it education sector or be it hospitality sector, where we have been doing a lot of logistics, be it passport delivery after visa, or even examination papers and answer sheets, etc. Because of COVID, obviously these things are not happening. So there is some amount of setback. Otherwise, it has been growing over a period of time.
Okay. I'll come back in the queue if there are a few more questions.
Sure.
Yeah, thank you. So I have received 3 to 4 questions in the chat.
Sure.
So what is the proportion of B2C and B2B in revenues? And also if you could give the revenue breakup originated from A, B, C cities.
I think generally I can give you a breakup on B2B, B2C. B2C is roughly about, when I say B2C, it is e-commerce players volume I'm talking about, because B2C people use it different places, different definition. So our definition for B2C is e-commerce players volume with our business to us, which is about 20%, which we currently carry. However, when you talk about ABC, sorry, the tier 1, tier 2 categories, that information I may not be able to give you because that probably is not in public domain, so may not be able to give you that in this platform. But having said that, yes, we do have major cities, metro and tier 1 cities contributing a major portion.
Yeah, and are all the new branches that have been opened in the last few years breaking even, or any further rationalization is needed?
So the locations rationalization which were done earlier in 2019, and thereafter we have been working on having break even from those locations, and I'm happy to say that all the locations have now turned around and generating good business and good profitability for us. And going forward also, now instead of taking as a project for expansion, we are looking at wherever the new areas we see business traction increasing. So off and on we keep adding those few pin codes to our serviceable locations. So per se, it may not be a large addition like which happened in 2018, but as a regular business as usual kind of a scenario where few locations will keep getting added to our serviceable location.
Sorry, sir, we lost you on the last part. You were not audible.
Okay, I'm sorry for that. What I was saying that after having done rationalization in 2019, we have turned around all the locations which were serviceable, and now all of them are delivering good results, and that is contributing to top line as well as bottom line. And as a business as usual exercise, we keep reviewing business volume into non-serviceable locations basis the demand, and then few pin codes we keep now adding to our serviceable locations. So it will not be a big one shot kind of a expansion, but yes, a few business as usual locations will keep getting added for a period of time where we see volume is increasing.
Yeah, and given the and given the scenario that economic activity picks up, in the next couple of years. So what is the capex planned in case that scenario happens?
I think there's already a lot of capex investment has already been done. We have enhanced our capacity in 2018 and 2019, and also a newer location which we have opened up. So they have a good amount of bandwidth to handle enhanced volume. Having said that, I think from capex point of view, we will continue to maintain current level of capex. However, within that, certain ways of doing things could change. So while capex budget overall could remain same, but some of the investment which are doing on airspace, especially on the engine shop visit side, may move out, and then could make way for our expansion plan. So the overall capex may remain in the same similar range for next 2 years.
Yeah. And what is the revenue potential from drone-based services and investments to be made for it? Sorry.
I think too early. We've just done pilots, and we are still continuing with more pilots on different products and what kind of challenges would be there. So at this point of time, I think it'll be too early to comment on revenue opportunities and also number of drones and all that viability. Once we are through with this pilot phase, maybe another 15-20 days. Thereafter, we can analyze the data and basis which you can have a business plan. So right now the focus was whether this model can work for us, and which we have seen successfully. Therefore, yesterday some deliveries were done.
Yeah, thank you. So anyone else who wishes to ask a question can unmute themselves and go ahead with their question. So meanwhile, I had a question, sir.
Sure.
How do you see the vehicle scrappage policy affecting the logistics sector?
So I don't think that will have any negative impact. In fact, all it could have is a positive impact, because you have relatively newer vehicle available which will have higher efficiency, and also from the perspective of that, when you have a newer vehicle, it could reach timely, so it could have a better service delivery for our customers. But negatively, I don't think there's any issue, any negative impact it could have.
And any impact.
And supply chain point of view, because there'll be more vehicle produced, more parts to be moved. I think that could be an opportunity.
Yeah. And any impact of dedicated freight corridor on our business?
In fact, we are seeing that as a newer opportunity for us. Not only dedicated freight corridor by railways, but also even by road. So newer, corridors are being prepared, like Bombay Delhi is being talked about. Will start by March 23. So we see that will be opportunity for us to, as we move ahead in business, because that will provide efficiency to us and have faster deliveries to customers.
Yeah. So anyone who wishes to ask a question can unmute themselves and go ahead with the question.
I have a few more questions.
Yeah, sure.
On the B2C segment, can you give us a little bit more granular details about how do you internally see this segment maybe 5 years down the line? What are the types of players that typically transact with us? I mean, is it very largely skewed to a few players in the market? Is there more concentration risk? And what are the kind of products that typically gets shipped out on the B2C segment?
I think B2C, which is e-commerce space, I think that's poised for very high growth, because we are there's a big headroom which is available, going by the example which we have of the developed countries. So developed countries spend about 15-16% of their retail spending on online shopping. India is about 3.5% at this point of time. So there's a much bigger headroom available for volume to grow. Having said that, I think Blue Dart is rightly poised with the right capacity, which we have built to handle this kind of large volume. Currently, also we are seeing healthy growth on volumes from e-commerce side. Is you're talking about concentration? I don't think we have any kind of a concentration. We have fairly diverse customer portfolio on e-commerce side, and and in fact, going forward, the new concept which is coming is omni-channel related growth. That could become a dominant, space within the e-commerce. So, like you have all renowned brands putting up their own websites and trying to retain their loyal customers by offering them value-added services, and that is a very interesting space for us, because when we talk about value addition, obviously they will look at experienced and established player who can handle their customer and delight them. And we have seen in the past quite a few big brands have already tied up exclusively with Blue Dart, and we have been delivering shipment for them, including ensuring that their loyal customer get value proposition what they are planning to offer. So that's a kind of a collaboration which we have, and I think as we move ahead, more and more brands will come and have their own websites, and they would like to have their loyal customer tied up with them. The differentiation here would be that if you are only looking at vanilla product, you can go to any of the marketplace. But if you are looking at value-added services and being a loyal customer, and also many new schemes which they offer to loyal customers, I think they would like the customers to come to their website to transact, and that's where our role comes in. And we have seen that space growing at a much faster pace, and with the high value addition or a better pricing for us.
So, but to ask this question another way, the largest selling products on in terms of gross merchandise values on e-commerce platforms are like mobile phones and consumer durables and apparels. Does our parcel, I mean, does our deliveries on the e-com B2C segment also is in the similar?
In this product only, yes. Majority is in this product.
Understood. And the other overarching question, since you are been in the industry for such a long time, just wanted to understand globally. I mean, one of the big reasons why this segment does extremely well is because logistics cost per unit falls over a period of time. So as you mentioned, dedicated freight corridor and other means, have you seen the cost for transport per unit actually come down, or are you seeing it as a trend so that it brings in more customers on board, apart from just the fact that they need the product, but it brings in more players on board?
So you are right. In fact, the government also is focused on bringing down logistic costs as volume grows, and that's why even in budget speech, finance minister talked about logistic cost being 14-15% should come down to around 8-9% in that range. So for that to happen, I think first we need to have infrastructure. And what you mentioned about dedicated freight corridor by railways and also by road, I think these are the kind of infrastructure improvement, and including opening of new airports when they come up, and also benefit of GST, because currently the GST, the way it was supposed to be beneficial for business, has still not happened, because still teething issues are being sorted out. So once centralized distribution starts happening, basis the positions which businesses have taken, I think all these ingredients put together will lead to efficiency in pricing. And the cost will come down. But the only point is that when it will happen, it's only question of that once all these projects get implemented and also people have stabilized their position on GST. Because one of the major factor which people were talking about, that you can service customer from anywhere under GST because of IGST billing, and you don't need to have multiple warehouses in each state. That's where the lot of inefficiency was there, because you're not able to put automation. Your staff is not fully utilized. You have extra inventory being tied up. You have working capital getting tied up. You have obsolescence costs. So all sorts of things and multiple transportation costs, because from manufacturing place to state warehouse and from there to final consumer. So all these are the inefficiencies which are there in the system. Once we have all this implemented, I'm sure the efficiency, in cost will get passed on finally to the customer as a drop in price for the per unit to the customers.
All right, thanks.
Yeah.
Yeah, thank you. So we still have 5 to 6 minutes left for this session. So if anyone wants to ask a question, they can unmute themselves and go ahead.
I guess if there are no more questions, we can wind up early.
Yeah, sure, sir. So since there are no questions, we would like to end the session. Thank you everyone for participating, and thank you, sir, for answering everyone's questions.
Thank you. Thank you.
Participants can log out now.
Taking that into account, I guess all of us will, ensure that as and when due, we will take that vaccination. Second, I would like to wish you festivities. Currently, we are in the middle of Ganpati festival, so hope all of you are enjoying in your limited ways because there are restrictions already. So, hope within that restricted window, you are able to enjoy with your family and friends. Thank you. Now, coming to the the organization and the performance, I am assuming that all of you had oversight on performance of the company as of last financial year, that is March 21. And thereafter, I'll start from this, or maybe I can start from the beginning of 21, how the scenario has been, and how things have panned out during the wave 2, and then how currently we are doing. When I say currently, meaning up to June quarter. So we had a based on the better realization and also cost efficiency measures which we had undertaken 1.5 to 2 years back. I think on the back of that, we have been having better performance in last 4-5 quarters. And the similar situation, you saw one of the best quarter in Jan to March quarter 21. Thereafter, we moved into new quarter, which is new year and new quarter. That's current financial year, 21-22, and we were continuing the similar journey what we had left in last financial year. So till about middle of April, we had a similar growth continuing what we had seen in the previous quarter. Then wave 2 came in, and that's where government, because of severity of pandemic, this time lockdowns were announced not by the central government but by the state governments, and those were different at different places because each state government had to take their call depending on their situation. So many of the business establishments were closed. Some of them were quite strict, and some of them were not as strict as the state governments were. So as a result, our volume, obviously had impacted because from mid-April to end of May. We saw a dip of about 20-25% on the volume, while network continued to remain, active as it was, as if there was no pandemic. So we had a full network cost, but because there was volume drop, obviously capacity utilization dropped. We could not have taken a call to cut down on network during this period because there was a large number of shipments still, say around, if you're using 65% or 70% of the capacity, obviously those customers would have impacted very badly and their experience would have suffered. So as a result, obviously, less number of shipment traveled in the network, which was fixed network. We continue to deliver, our USP on reliable and timely delivery to our customers. which continued till about May end. Thereafter, there was a strong bounce back in June, and we saw in the June month probably we came back to the levels of February, March where we had left. So while April first fortnight was good, second fortnight got impacted, and May completely was impacted because of various lockdowns and various restrictions. June was a strong comeback, and we came back to the levels as if nothing had happened. And from there on, our journey, what we had left or what we had concluded in March, we are from June onwards, we are on the similar journey. You may call it it was a blip of about 6 weeks in between because of severity of pandemic wave 2 and lockdowns as a result of that. Otherwise, top line realization, cost efficiency measures, all that initiatives which we had undertaken, all of them have been working well and delivering on the target, or maybe a little beyond that target. So that is where currently we are in. And with this and outlook perspective, I think given all the indicators which are there from economic front, be it GDP growth, be it government policies, be it recent budget which talked about growth in manufacturing and improvement in infrastructure, be it dedicated road corridor or railway corridor, or number of airports which are being opened up or privatized. All of this augurs well for improvement of infrastructure, and we are quite optimistic about growth in times to come, because government focus is more on Make in India, and also some of the geopolitical situation is helping country to get more attention on the manufacturing side. So as a result, we being part of supply chain, obviously both production side as well as consumption side, we play a vital role in ensuring that production happens. And from that perspective, I think quite positive outlook we have, but for wave 3 of pandemic, which could spoil the party again for the time being if that was to impact business. While having said that, we expect the kind of vaccination program government has initiated, large number of vaccination happening. We expect that there could be muted response to wave 3, and it may not impact businesses as it had impacted in wave 1 and wave 2. But we're still keeping the fingers crossed and hope we come out of this wave 3 soon. With that, I guess I can hand over to Aman for any question answer. Thank you.
Yeah, thank you, sir. So anyone who wishes to ask a question can unmute themselves and go ahead with the question, or they can also raise their hand and type in the chat box. I'll be happy to read out to the management.
Yeah. Hello.
Yeah, Dhaval.
Yeah. Hi, Anilji.
Hi, Dhaval.
Yeah. Sir, my question with regards to if you can give a little bit of understanding what's happening in terms of competition in the express logistics. So we heard investment by FedEx in delivery, plus they acquiring Spot On, and a couple of transactions taking place in the industry as well. So what actually is happening? If you can give your comments, how do you read them, and how does Blue Dart? What is the strategy wise? What is Blue Dart going? Planning to do over next 2-3 years to combat the higher competition? Yeah.
So very good question, Dhaval, and multiple questions combined in one. One, that competition is space and how is Blue Dart gearing up, etc. from that angle. So let me try and give you few perspectives here.
Sure.
Firstly, as far as competition is concerned, I'm sure competition has been there and is there today and will continue to be there. In future also. Whosoever wishes that competition may not be there may not be right approach, because you cannot prevent competition to be there. Having said that, I think what one needs to focus is on one's own USP, and USP is focusing on customer voice and also delighting customer from your service perspective. So as long as you are meeting customer promise and also delighting him through your service delivery, I'm sure one need not to bother about too much about the competition. Having said that, because of this, one cannot take eyes away from competition. Obviously, currently, logistic space is quite interesting space. Number of transactions are happening, and number of restructuring or reorganization, or people are collaborating together. All that scenario is happening because uh, uh, looking at the macroeconomic scenario, there's a feeling that going forward, logistic industries will play a vital role in development of country. And as I just mentioned in the opening remark, because if manufacturing is going to grow, if government is looking at growing GDP and making it a 5 trillion economy, and also Make in India program, and the geopolitical situation is forcing companies to have a base moved out from our neighboring countries into India. So all of this probably people see that have a good demand for logistics, and that's where it's becoming very interesting space. Apart from that, even internally also government is talking about improving infrastructure. A lot of investments are coming, both air, ground, rail, and even airport premises. So all of that is basically to improve efficiency of logistics. People talk about 14-15% being a logistic cost, which obviously is on a higher side if you compare with the developed countries. So with this infrastructure improvement, government is looking at bringing down that cost to around 8-9%. So for that, obviously this infrastructure and also the scalability, the volume which will come.
Agreed. Just sorry to interrupt, but I'm looking mainly from an angle of where the money what these PE guys are throwing at. Okay, so पहले अपना e-commerce का story था. They are on e-commerce logistic. Now they've acquired Spot On. Now FedEx has put money into delivery. So there's a lot of money flowing in one organization. So with now keeping in mind Blue Dart's opportunity size, are we, is there a heightened competition because of money flowing in non-e-commerce logistic also? I want to understand from that perspective. Yeah.
Money is not just flowing in one company. There are many startups, many fintech companies. There are so many logistic companies are there. So only thing that probably media coverage is to one or two companies. Other money is getting into all logistic companies. Many of them are mushrooming. Many new startups are there, which we are aware of, and we are keeping tab on them as to what kind of solutions they have and how are we posed against them. Obviously, our target continues to be, or our strategy continues to be delighting customer through best of the servicing, best of the offering in terms of service delivery and also information being given to them. So from that perspective, we are also focusing more on service delivery and also our reach into tier 2, tier 3 cities. So keeping that in mind, only if you recall in 2018, we had expanded our reach very, very aggressively. Yes. In 1 year's time to more than 18,000 pin codes. And then we rationalized to 14,400. Reason was that rest of the pin codes were not economically viable to continue to serve, and that would have drag on the bottom line. So we thought 14,400 pin codes are covering 98% of the Indian GDP. Maybe we can restrict ourselves to that level, and thereafter, as and when there's a business traction and there are growth in balance areas, we can keep expanding a business as usual. So that was a call taken, and now I'm happy to say that the areas where the aggressive expansion which we had done in 2018 is yielding results for us and also generating a lot of good volume, and all of them are now turned around and delivering top line as well as bottom line.
Got it. Sir, in the first quarter, have we? We saw a margin dip going to 18% odd. So is that because in expectation of a large volume, we expanded a lot of our manpower or the operating assets?
Quarter one was not because of that. Quarter one was because you are running full network and with a lower capacity utilization. Purely it was a game of a lower capacity utilization because cost was as it is full and there was no or rather lower number of shipment. Like if you're carrying 100 shipment in a vehicle, instead of that, because of lockdown, now you are carrying 70 shipment. Obviously, cost remaining same, you only gave away revenue.
Okay. Because we see employee cost has gone up from 176 to 193, quarter on quarter. So what is the reason for this increase in spite of I would say a lower top line?
So it is not because of the top line. Generally, we are in fixed cost model, and there is a inflationary increase which we give every year in April, right? And also compliance to minimum wages, which government keeps increasing. So, like if you see, Delhi government has been quite aggressive. Even Karnataka and Kerala government have been quite aggressive. So when you have, I'm sure you would be tracking that. What is the kind of minimum wages Delhi has now announced,
Yeah. Okay.
right? So all of that correction actually goes beyond a normal inflationary increase, and that adds to the manpower cost.
Okay. Okay. So that wage code in that wage code bill, something we were talking about in our previous two meetings, has something happened on there?
So, wage code has not been implemented as yet, but yes, from readiness point of view, I think we are better prepared. Our impact to us would be relatively much lesser because we are already much higher than the minimum wages as compared to competition. Because what I believe is competition is paying minimum wages of each state and carrying on the business. And while we have a threshold which is much higher than the state minimum wages, many of them.
Correct. Okay. Okay. And this operating and other expense also went from 63 to 76. So that is also, I mean, some expansion, or what was that? Quarter-on-quarter growth in the expenditure.
You're talking about the June quarter, right?
Yeah. So from March.
So last year June quarter, you are comparing June quarter versus June quarter, right?
No, March quarter to June quarter.
So March quarter to June quarter, when you look at the absolute numbers, right? Absolute number would have impact of fuel prices.
Fuel price.
Yeah, fuel price in the operating costs.
Acha. Okay. Got it. Okay. So yeah. So coming back to okay, can I ask one more question?
Sure.
Yeah. Okay. Sir, do you think Blue Dart needs external capital to compete with the and the way others are getting capital, and for us to keep growing and grab the market share, because our lot of growth is dependent on express B2B express logistics. So any thoughts on that?
So from a infusion point of view, I don't think there is any capital scarcity with Blue Dart. In fact, we have surplus cash as of March. Large amount of cash is there, so it will not make sense to further raise capital. It is question of that we have already enhanced our capacity to handle larger volume, and that's why currently we are seeing very healthy growth on volume and is still able to use leverage our existing infrastructure in which we invested in 2018. So we have both in technology as well as infrastructure which we built up. So we've been using that. It's only the question is that we are not putting as much effort in marketing that what we had done earlier. But otherwise, we have built up a good amount of capacity, and we will be not shying away if we need to have more capacity built up because money is not an issue. One, that we are already cash positive, and second, even group also has got a strong foothold.
Yes.
So I don't think money will be an issue here to grow.
Okay, so if need be, the parent can also put in money.
Yes. So all options are available, if required. But I don't think at this point of time we are looking at any money, because we ourselves have enough money on the balance sheet.
And any large capex plan in mind?
So as of now, not much, because we have just 2 years back invested heavily on the capex side.
Okay, but if at all we decide, what could be the quantum whenever we decide?
So depending on what kind of proposition one has, accordingly amount will get established. But right now, I think roughly about 150 crore to 200 crore kind of regular capex which we have. That would continue at least for 1 or 2 years, unless any big proposition comes in.
Got it. And sir, any impact because of semiconductor shortages? Do you see, because of your clients and you would also are facing that currently, an impact on your business?
Not exactly at this point of time. We're not seeing any challenge. Yeah, at this point of time, no challenge.
Okay. Fine, sir. I'll come back in the queue. Thank you.
Yeah, thank you. Yeah, Mayur, you can go ahead.
Good evening, sir. I thought video is better, I think, right?
Yeah, good evening, mate.
Yeah. Pardon me if I have not gone into too much of detail of Blue Dart. I understand a little bit of logistics. So if there are any questions which are out of line, my apologies on that. I will focus on the little broader.
No issues at all. We all learn. Absolutely.
Okay.
No question is bad question.
Okay. No, currently what we are looking at, trends in terms of logistics are largely, apart from the express and the B2C side, B2C side in the sense of, ultimate customer focus. What are your thoughts about Blue Dart presence into the supply chain, which is, before the final delivery, which happens in terms of logistics, warehousing, managing the supply chain vendor system? Where are we present there, and what is our share currently, and what are our thoughts from a future perspective?
So from last mile, I guess your question is more targeted at last mile and warehousing, right?
Yeah, so we are already present a lot on the last mile side.
Yeah, yeah.
So apart from last mile, yeah, where what is it?
So the entire supply chain, when it comes to express, I think we are well poised with a good amount of capacity available at this point of time, which we built up in 18. Though in between there was, because of pandemic, may not be utilized properly. But at this point of time, the benefit of those investments we are seeing. That's point number one. On some of the facilities, generally we are on asset light model. So when some of the facilities do run out of space, we do take much bigger facility, which could cater to our requirement of about 8 to 10 years horizon. But since all of them are on asset light model, when I say asset light model, meaning they are on rentals, we don't invest in real estate. So obviously, from investment point of view, it may not look like a big investment, but yes, we do keep enhancing our capacity as when we come closer to, or say around 80-85% or 90% facility utilization happens. We immediately start looking at getting a much bigger place, which could help us at least for next 10 years. So this is the forecast of growth.
So what will be our share of warehousing? Only pure kind of warehousing and value added there?
No, we don't do any warehousing. We are into express logistics.
Right.
Warehousing is handled by our group company, which is DHL Supply Chain. So they have big facilities available for warehousing. But any of the Blue Dart customer requiring warehousing facility, Blue Dart can offer that as a single point of contact, and backend we tie up with our group companies. So that's how we are able to offer all the services of our group companies as a single point of contact to our customers. It's a seamless for customer.
Okay, so individually, as a Blue Dart Express point of view, we will not enter into any kind of 3PL services or such a services.
At this point of time, there's no plan, because otherwise we'll be competing within our group.
Right.
Yeah.
Right.
While we are able to offer the same service to our group companies and having backend tie-up, and we do have a mechanism through which such tie-ups work.
Okay. Sir, another trend which we are seeing in logistics is, logistics is becoming increasingly a domain-specific industry, in the sense of, the supply chain or the entire services which are to the pharma or the end consumer is different than what it will be for a consumer sector, what will be for electron. So do we have a play there, or do you think that is something which is increasingly becoming important, and for us also, or for us it is largely agnostic in terms of consumer sector and largely B2B express? It does not valid, or there are domain specializations required?
So when you talk about the B2B, I think you may not need this kind of expertise, specific expertise, unless you're talking about vehicle movement, which is, like fruit trailers or project movement, which you're talking about, which are specific for service. But if you exclude them, I think we are agnostic as far as B2B is concerned. Any kind of industry vertical we can deal and provide service to. Having said that, on B2C side, more specifically, we do have some expertise, and more so, be it pharma, vaccine distribution, or you talk about electronics distribution, which currently we have, like iPhone, Apple tie-up, Omnichannel. where we provide individual consumer service. We have BFSI sector where we have expertise in terms of delivering all secure products, be it credit cards, debit cards, welcome kits, etc. And also even on examination logistics and passport, the travel logistics which we had direct to the consumer, where after you have visa effects and then finally passport to be delivered back to consignee for travel. So all these are specific expertise which we had, including like examination, carrying a question paper, then taking the answer sheets back, and then taking it back again for moderation, bringing it back to the institution so that they can consolidate and declare results. So all that logistics, specifically on direct to consumer side, has been a forte for Blue Dart.
Okay, interesting. Thank you, sir. Thank you, Amish.
Yeah, thank you. So I have a couple of questions in the chat box.
Sure.
So what were the key drivers of margin improvement in FY21, and if you could give your outlook on margins going forward?
So margin improvement has been a factor of 2-3 things. One is the realization improvement, which is ensuring that we pass on inflation to the consumers. So this is one of the criteria from which helps not only growing top line but also ensuring that we cover our inflation by way of passing it on to customer. Second, on efficiency and cost optimization drive which we had, which also ensuring that our network is properly utilized, the network is optimized, manpower productivity is optimum, and also aircraft routing and aircraft capacity utilization is optimized. So these are the few initiatives which we had undertaken and which have now delivered results. One of the other exercise which we carried out was right sizing exercise, where some of the roles had become redundant and which we had a golden handshake kind of situation in December 19. So that also helped us in improving margin. The fourth one is focusing on cash generation. And that's why you see very healthy cash situation from maybe 19 to 20, 20 to 21 if you compare. The cash generation has been quite good. And there, one, the cost optimization, second, on the recovery side, and also balancing the vendor payments have helped us in terms of having a better cash flow so that borrowing requirement goes down. As a result, one, that your interest cost is minimized. And two, if you have a cash surplus, you can also generate some returns from there. So these are the few strategies which we have been operating on. And within cost optimization, I'm sure you would know that we had certain reviews done on various cost items, including leased aircrafts, which is one of the bigger costs. And we did find that 2 of the aircrafts it made sense for us to buy, which will give us better efficiency, as compared to continuing them on lease. So we bought those 2 aircrafts, which helped us also in generating better bottom line. So all these initiatives have been worked upon, which are all trending well and sustainable one as you move ahead. So having said that, from future perspective, I think all of these are sustainable, which will continue to deliver result as they are expected. And we are still continuing and looking for areas where we could improve efficiency. By way of digital solutions, the new technology when comes up, it offers some kind of efficiency. We'll be more than happy to adopt the newer technology which provides efficiency, and also automation in our hubs and warehouses. So these are the few thoughts, the few areas which we're working on to have better efficiency as we move ahead, and also ensure that our operation does not get impacted, because with the increased volume and the similar kind of time window, because you have a particular time window for connection from pickup to connecting to the next location. In a similar window, how do you handle more volume? Obviously, automation and efficiency improvement can only help us in handling larger volume. So those are things which are on plate, which are being worked upon, and could also help us in improving further efficiency.
Yeah. Dhaval, you wanted to ask a question?
Yeah. Sir, what are, sorry, my video is not working for some reason. That's why I'm unable to start.
No, so I can hear you loud and clear at least.
Yeah. So what are the near-term headwinds do you see for the business?
Near-term headwind, one is that we are talking about wave 3. Hopefully, that does not disturb business as much. That probably is the only factor, and obviously nobody can predict about geopolitical situation. Like nobody had thought Afghanistan, situation will change so fast. So if that kind of geopolitical situation creates some kind of business environment, obviously those could be the risk at this point of time.
Okay, got it, sir. And so now this PLI is now translating into actual factories being started building up and everything. So say by over next 2-year period, do you see a higher growth coming from pharma related business or a mobile phone related business in the express logistic? How would you see growth coming from there? Because in pharma you are a leader in temperature control. In mobile it's a fragile item, so there also you have a good market share. Plus B2B export of our mobile phones. How do you capture that for Blue?
So I think what you said rightly, this going forward, there's a very quite positive outlook which we have, but for the risk which we just discussed. So from that perspective, and given the all indicators which you mentioned, and also what we are seeing from policy front and also government intervention side, like you've seen many of the policies government is working on enacting, including national logistic policy, e-commerce policies, etc. All of these could have a positive impact and improve efficiency, and that's where we see that barring these risk factors which we just discussed, I think at this point of time outlook seems to be quite positive.
Okay, so pharma would be how much of our business? If you can, would you like to share that?
Especially that information is not in public domain, so I'll not be able to share that with you at this point of time.
Okay, so in pharma logistic, we only do temperature control or anything more than that?
No, we do multiple things, not just temperature control. We do carry vaccines, so we do have other drugs carried in our network. So in fact, this is one of the key vertical for us, or probably features in top 5 verticals.
Okay, and that goes both by air and by road both.
That's right, yeah.
Okay, and in terms of this electronics like laptop, mobile phones, and there, so where do you play the role in that?
In fact, this is also one of the key sector or the key vertical where we are quite strong, and more so, as I mentioned, that Apple has been in public domain to say that they have exclusive tie-up with Blue Dart. So any Apple order you punch in at Apple website will be exclusively delivered by Blue Dart.
Correct. So that is on the B2C side, but if
even B2B side also, the entire movement, because we have an exclusive tie-up with Apple, where the entire movement is undertaken by Blue Dart.
Okay, so if Dixon is making mobile phone for export or maybe for some domestic, where would you come in that entire?
Right now, we handle only domestic part because Blue Dart is not in international. This thing DHL would be handling the domestic part.
Okay, so delivering to the end customer is where Blue Dart will be there.
That's right.
Okay, nothing in between. If Dixon wants to buy some part from some other company in India related to mobile phone, would you be there in that chain or?
There we may be partially, but finished product, as far as finished product is concerned, that is where we will have full distribution or exclusive distribution.
Okay, so in this entire electronics and consumer durable, you are more on the B2C side, like where you actually
both B2B and B2C.
Both.
Okay. So be it you talk about Xiaomi, you talk about other brands, Vivo, Oppo, all of them have movement through Blue Dart.
Okay. So sorry, what do you mean by B2B then?
The B2B is when you move from production to your within supply chain or to dealers.
Okay.
When I say B2C currently for me in our definition is only e-commerce movement.
Okay. And who would be your peer to you in this space?
So in ground, I think you have competition players like Safe Express, Gati, and TCI.
So they would also move mobile phones?
To some extent, yes. Some of them they do move.
Okay.
But larger share will be with us, because some of these companies have 2 vendor policy at least. So they don't want to increase monopoly. So obviously they need to have a minimum 2 players. So so then if you have 2 players, some movement has to happen to those players as well.
Got it. Okay. Got it, sir. Got it.
Yeah.
So I have a couple of questions in the chat box.
Sure.
So one participant wants to know the rough revenue breakup, sector exposure in terms of largest sector and any upcoming sectors that you have.
So it's a very well diversified portfolio. There's no dependence on any of the sector or any of the customers per se. So it's risk-wise, it's very well covered. So no sector or no vertical would have more than 2-3% share in the overall revenue. So very well diversified.
Also, if Blue Dart is present in the chemical sector as well?
Yes, we do carry chemicals. In fact, there are certain kind of chemicals which can be carried only in cargo aircraft, not in passenger aircraft.
Okay, yeah. And what offerings of BDE is impacted most from the pandemic and yet to recover? Is the demand lost in those segments permanent or they are temporary?
I think there's one segment which is document segment, which I just mentioned earlier. That's the hospitality sector and also educational institution not fully open at this point of time. So as a result, there is some impact on the document business, which we believe is a temporary, because we have seen is and when between wave 1 and wave 2, offices started opening and some work has started happening. So we saw that it coming back to the pre-pandemic level. So we feel that soon it should be at a pre-pandemic level, and then start growing from there once the restrictions are removed.
Yeah. So anyone who wishes to ask a question can unmute themselves and go ahead. Yeah. So there's another one in the chat box. What is the share of documents in revenues?
Overall, it's about 25%.
And what would be the share of top 50 customers?
Top 50 customer would be around.
Top 10, sorry.
Top 10 would be hardly anything. It'll be not even 10%. It's very well diversified.
Sir, I have a question. Sir, if you can, tell us what technological development in terms of, everything related to tech, what Blue Dart is doing, to keep itself relevant ahead of the time, given the backing of the parent, because generally startups are, are supposed to be, well ahead in all these things. So what are we doing in this space?
Very good question, and you are very, I would say, correctly asking this question. There have been, I would say, technology is a backbone of any logistic business one could carry on, and without technology, no business can survive, especially when you have a large volume. Yeah. Having said that, I think we are also ahead of curve on technology. We have been investing proactively. And number of initiatives which we have undertaken to have digital solutions and better customer experience. Basically, during pandemic we have initiated a large number of initiatives through which we have improved the customer experience, and as a result our top line has started growing, and that's what you see in the top line growth. So few of them I can talk about which are very path breaking. One was during pandemic, to ensure safety of customers and also our employees, we had developed contactless deliveries, which industries adopted. Similarly, on payment and collection side, we went completely digital. So right now, you can make payment through multiple channels, so all possible channels which are currently available in the market. We have capability to accept payment from customers. Similarly, we also make payment to our vendors through digital mode, so that there's no paper. And now when you take away paper, you are doing two things. One, that you are improving efficiency because you can do automation. It's not in manual mode, so efficiency improvement happens. At the same time, you're taking care of your environment. So you are trying to avoid cutting trees, etc. Because large number of papers otherwise are used, through and they are produced by cutting trees. So, and you'll be happy to note on World Environment Day, 5th June, we had launched our vendor portal, whereby all vendors of ours can they upload their bills in a soft copy form. And end-to-end automation will ensure that not only accounting is done with the proper controls and checks and balances through workflow, but also the payment also happens automatically. So the entire process is now automated. Accounting to this thing. And from customer interface point of view, we do have dashboards available, which is real-time updated, where customer can see the shipment journey. And also visibility point of view, it gives them visibility, and any additional actions are required. All that apart from the data analytics which can be done on the dashboard. So all sorts of solutions on digital platforms are available. We are monitoring. We have a network module which is again gone digital, through which we are monitoring efficiency of our network and how we can optimize not only from operations point of view but also cost point of view in our network. So that module also supports us. So all these initiatives on the digital side actually helped us.
Okay. As it is entire infrastructure, IT infrastructure, how much is it captive and how much are we dependent on an outside company?
So most of it is in-house developed along with the outside parties, but then it is owned by us, and we have capability to do changes if required.
Okay. Okay. Yeah, got it, sir. Thank you.
Yeah, thank you. So we have around 5 minutes left. So if anyone wishes to ask a question, they can unmute themselves and go ahead.
Hi, this is Jigar Walia from OHM. This is just one question is, last 3 quarters, before the Q1, we've seen the margins being quite phenomenal. And you mentioned that the Q1 did get impacted early on due to the second wave. Incrementally, should we see margins going back and sustaining to the prior 3-quarter levels?
Our effort is to have similar kind of volume, similar kind of a margin which we've seen in the last 2-3 quarters, right. and maybe improve on that.
That's very heartening, because these margins generally have been unprecedented, given looking into the long history, and we've always known Blue Dart to be in the range of the mid-teen margins. Anything more than that attracts competition, and anything low is when we briefly went into the investment phase. So you see that these should sustain for the few more quarters easily, or
I just mentioned that since we are fixed cost model, so obviously any better volume growth will tricks in the leverage of fixed cost, the operating leverage. So and given that we have a positive outlook, but for the 2 risks which we just discussed about, it should only help us in improving our margins.
Thank you.
With the efficiency program continuing.
Yes.
If not, at least efforts will be towards to maintain at least.
Very heartening, sir. Thanks so much.
Yeah, thank you. So last couple of questions, if there are any, we'll be happy to take. Otherwise, we would close the session.
Anilji, hi, this is Harsh from Centrum PMS. Sir, your comments on, if you have seen any market share changes in your B2B express business.
Hi, Harsh. I think at this point of time, there's no study available, though we do have a sense that we would have improved our market share because we did gain few large, new customers during the lockdown period, and they continue to be with us. But at this point of time, reliably to say how much we have improved market share is difficult because there's no study which is which has been undertaken. So maybe once we are in a slightly better scenario, then probably study will be conducted and we will know exact number that how much market share we have gained.
And sir, any sense on how has peers done, the startups and Gati, Safe Express, TCI, in terms of market share movement?
So my guess is, especially on the air side, we would have gained definitely because we have new customers who are not dealing with. Similarly, on surface side, we have gained customers from competition. So I'm sure they would have also grown, but how much they would have grown their market share only we will know once we do study. At this point of time, it will be it'll be as good as your guess versus my guess scenario. Maybe we wait for a month or two. By the time, probably we'll know about wave 3, and thereafter, probably study can happen because last 2 years studies have not happened because due to pandemic.
Okay, sir. Thank you.
Yeah, thanks. Yes, Mayur bhai.
Sir, last question actually from my side. A lot of our improvement you mentioned in detail about the cost efficiency programs and how we have the last question also talked about margins in last 2 years our efforts, and it is like all-time high margins, and you are further saying that we will further improve on the endeavor is to further improve.
Yes. Our effort is to further improve and optimize. Yes,
right, sir. So that's great, but sir, on the top line side, if you can throw light on from two perspectives. One is, despite so much of opportunity which we see on the e-commerce side today, practically every enterprise, every business, every sector is moving on the e-commerce side, whatever their omni-channel strategy or whatever it may be, but there is a presence on the e-commerce and delivery, and customers wanting it to be on time, and express is a big thing. So despite such a huge, large opportunity which is there, why aren't we in a position to push the sales growth to 15-20%, 10-15-20%, and why are we in the region of more like a single digit on the top line side? And also along with that, your comments would be will help on both aviation side, on the air side as well as on the ground side. The point is, I'm trying to, can we become a 10,000 crore top line company in few years? That's I know the number is just to understand that where are we and why not on the top line growth apart from the efficiency in the board.
So I think a very valid question and good question, and let me try and answer that. See, firstly, there are competitors who are into valuation game based on the turnover top line, because currently they need investment. Investment comes by way of valuation, and valuation currently is being done based on the top line and not what is there in bottom line. And you've seen that in past 3-4 how investments have happened from PE side. Having said that, I think from Blue Dart perspective, last 2-3 quarters, I'm sure you would see there's a healthy growth on top line as well, and that is backed up by good, I would say realization and also good growth in volume from our customers, and more especially from B2C customers, which is e-commerce players. Having said that, I think if you only are focused on top line growth and you don't have to deliver bottom line, why 15-20%? You can grow 50%, you can grow 100%, because then you are not accountable for your bottom line and margins. Like right now, you must have seen that the discussion which you have been having is more on margin improvement and how margin can be improved and what kind of margin we have. So if we, what we are trying to do is have balance between top line growth and margin, rather than just having a growing top line, which any day, anytime one can grow. Today, if Blue Dart wants to grow top line, just drop the price and from the premium pricing and capture the market. It is the easiest thing to do. But then, can we then long term sustain that in terms of deliver bottom line or the margin which one would look at it? I think that will become challenging scenario, and that's what currently maybe competition is facing that, because earlier they have undercut and sold their services at lower than the cost, and now they will feel the heat, because when they need to make the business sustainable or give returns to their investors, obviously they need to be profitable, and to become profitable you need good price hikes, which if you go to customer and ask for 20-30% or 25% price hike, which customer is going to give? And more so when they themselves are under challenging situation. And I'm sure you know that all the e-commerce players themselves have been bleeding. So if a person is making losses, on top of it, if you ask for such high increase, do you think they will continue with them? And that is where the challenge lies. So that's why we as a strategy, we had decided that we will do business profitably. Yes, for some time one may have a lower margin, but then it cannot continue at a lower margin. Then we last year onwards, we have improved our margin to the normal levels, and we are seeing growth, because now all these people are talking to the customers to increase. Obviously, no customer can afford to give those kinds of prices, so obviously they come to established player like us. Hope that answers your question.
Yes, sir. Thank you.
Thanks. With this, Aman, can we close?
Yeah, so that would be the last question of this session. Thank you to all the participants for participating, and Anil sir, thank you so much for answering everyone's questions.
Thank you, sir.
Pleasure. Thank you. Take care.